Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's the Wednesday morning and it's getting very, very dizzy. If you're trying to follow those tariff headlines, well, good luck. Well, that's what we've been doing here. We'll talk about it. I'm Surabhi Upadhyay. As always, with me is Nigel D'Souza. We have Rima with us. Guys, it's just too much news. I must admit, I'm a news junkie, a journalist at heart. But even for me, too much news for these markets.
Oh, indeed. It's 25%. Is it 50%? Is it on pause? Is it a 1 month? It's just dizzying, the kind of news flow that we've got over the last, month and a half since he's been in office. But it's just getting amplified, I feel.
Well, in the last few days, the feeling you're getting is, thank God you're in the Indian markets. Because you have a couple of global triggers that are working in your favor. You have policy that's supporting both from the RBI as well as the central government as well. So the Indian markets in a very wobbly environment seems like a good place to be in.
Yesterday's price action was very encouraging.
Very encouraging.
Closing at the day's high near to 22,500 in the face of the global.
But then that FPI sell number, it started inching higher. So, it's a fairly muddled situation that we're in the midst of, but I completely take that point that even if you exclude all the tariff headlines, we are a domestic-facing economy at the end of the day. Yes, exports are extremely important, more services than goods. But, we have a lot going domestically for us as well. And maybe that's exactly what the bulls will eventually focus on.
And yesterday, Rhythm sounded very, very confident that the domestic flows will continue. Today, we'll be hearing about the past month's
mutual fund
flows.
Data.
So that's going to be the big trigger to track. Retail is hanging on, holding in there, showing the big money. That's going to be important.
Okay, so let's straight away get to it. In terms of retail flows, hopefully we have absolutely no problems. We haven't had any for the past 6 months or so. But globally, those headlines, as we've been telling you, are, they just sends your mind in a tailspin. Because, just see what happened overnight. Very volatile session on Wall Street and indices sort of following different colors. What happened was there was this headline around 11:30, 12 o'clock our time that now instead of 25%, Trump has threatened Canada with 50% tariffs on steel and aluminum. And why is that? Because Canada said that we will be putting an additional tariff or a surcharge of 25% on the electricity exports going into the US. So there was this absolute trade war skirmish that was playing out. By the time we woke up, thankfully, it had been rolled back, and that's largely because Canada kind of dialed back on its position. You had the Ontario Premier, Doug Ford, saying that we will pause those additional 25% tariffs on electricity, which is, going in from Canada to the US. In response, President Trump also pressed the pause button, and he said that no, as of now, it'll be the original plan, which is 25% tariffs on steel and aluminum. So that's what happened. It did whipsaw the markets all over the place. The S&P actually intraday slipped into that technical correction territory, which is 10% fall from the peak, then kind of recovered a little bit, still ended with a cut of about 0.7%. Dow was down 1%. Nasdaq relatively better off because there was some buying, some bargain hunting going on in tech stocks, which are beaten down quite a bit. Yesterday, airline stocks are very weak. Some of the carriers in the US are coming out with a bleak outlook, cutting back their earnings expectations. So travel stocks, airline, travel, hospitality, stocks like Airbnb, they were down 4-5%. So that's where the hit was yesterday. Now, what has, Donald Trump said? For me, among all the commentary coming in yesterday, this one quote on the stock market was very, very interesting. Is the Trump put no longer available to the market? Remember, when he came into office, everybody believed that he will do whatever it takes. At the end of the day, he will keep Wall Street happy. That's not what the president is saying right now. He says yesterday, markets are going to go up and they're going to go down. But you know what? We have to rebuild our country. This is in line with comments that were earlier coming in where he said the economy is going through a transition. So watch the commentary very, very carefully. It's not what Wall Street was really prepared for. Let's move on. We've spoken about equities. Let's talk about bonds and currencies and what was happening there. And the movement in yields was about 4 to 7 basis points, depending on which one you're looking at. The 10-year has now pulled back up to 4.27, so a little bit of a rise in yields. The spotlight continues to be on the inflation number. Today, the US will look at the CPI number. Tomorrow, it's the PPI number. The CPI number is expected to show an increase of 2.9%. This is February CPI in the US. year-on-year increase, 0.3% if you're looking at it month-on-month. Extremely crucial. It's all about inflation and inflation expectations. Are these, tariff worries feeding into the expectation on inflation going high? So that's why that data is extremely important. The dollar, at the DXY level, the dollar is still, it's just below 104. But it's a lot about, individual trading partners and how currencies are moving. Against the Canadian dollar, the US dollar actually rose yesterday. The Canadian dollar was under pressure because of all this tariff talk. Against the euro, the dollar continues to fall. The euro rose another 0.7% yesterday, now almost 109. I mean, it's historic levels for the dollar euro as well. That's how it kind of played out. Oil has been very range-bound. The good headline that we got was that Ukraine now finally, after that whole showdown in the Oval Office, Ukraine has relented and they're ready for a ceasefire deal if Russia agrees. So there's some breakthrough over there. Not much movement in the oil markets, actually. Oil is still very range-bound. But that was the other headline. Now, for us, the market was resilient, like, we've been talking about it. Extremely stable, one could say, in the face of this absolute global volatility. The bulls will hope, even if we can consolidate with a positive bias, slightly outperform global markets, the bulls will take it with both hands. And hopefully, the slam and dunk and the negativity around IndusInd Bank, that poison is already out of the market. So we can start getting some stability even in the bank nifty. That's what I'll watch out for. Along with banks, I'll also look out for telecom stocks. And Rima will tell us why in just a bit. Because imagine this. Mr. Sunil Bharti Mittal was fighting this at global platforms, at local public platforms for the longest time against Starlink. And now I think it's that philosophy that if you can't beat him, join him. So that was the philosophy perhaps that was playing out because Bharti has announced that tie-up with Starlink. Starlink still needs to get its permissions to roll out in India, but that was a big one to watch out for. And in addition, PB Fintech is a stock that I'll watch out for because now we have the numbers. They're talking about this healthcare foray. Yesterday we got the numbers, 700 crores. That's how much they're putting to work. So it's sizable money. That's another one on my radar. Guys.
Well, there was one more headline from Trump that caught my attention. Is in the morning, one of the correspondents, ABC News correspondents, asked Donald Trump about the recession, right? Because it was the recession fears which roiled the markets over the last 24 hours. And this is what he had to respond. He says, I don't see it at all. I think this country is going to boom, but as I said, I can do it the easy way or the hard way. The hard way is what I'm going to do, but the results are going to be 20 times greater. So he's downplaying the recession risks after raising it just 24 hours back. And even Commerce Secretary Howard Lutnick defended Trump's economic policies on Tuesday, saying that it's worth it, even if it leads to a recession. But as of now, Trump has downplayed the recession risk. That's the key takeaway. Now, getting back to that FI sell figure, on Monday, this FI sell figure was sub 500 crore rupees. 485 crore was the net sell. Yesterday, we got a massive 2,800 crore in terms of an FI sell, and that would worry you. But here, I just want to add that maybe it's a lot to do with IndusInd Bank because IndusInd Bank's delivery volumes was about 2,200 crore rupees, and we know the FIs own about 25% in IndusInd Bank. Now, onto the levels to watch today, just in the near term. Yesterday, we closed around the 22,500 mark. The key levels to watch on the way down, 22,314. That was the intraday low yesterday. And the high would be 22,676, which was the intraday high on Monday. So keep your eye on these two levels. Well, what will you watch today? Just a quick recap, because we've discussed this. 25% tariffs on steel and aluminium come into effect from today. US CPI inflation print. The AMFI data for February, as we've been highlighting, especially because the February DMAT additions were at a 21-month low. So the AMFI data, the faith, if the retail investors continue to pour in money in the Indian equity markets, it will be sort of a litmus test after the kind of mayhem we've seen in the markets. And important macro data from India, Feb CPI and the January IIP data.
Well, that's right. And I'll get back to the point when things are a little bit wobbly, do what's in your control. And it seems, the Indian markets, both on the policy front, whether you're looking at what the RBI is doing, what the government of India is doing as well, and also the domestic flows have been good. So India seems to be a rather good place to be in. Now, the top cues that we look at, the Troika, well, that's well behaved. And that's something that's holding us in good stead. Dollar index is down, you have crude that's lower, and the yields as well, the 10-year yields, more or less stable. So that screen is working in our favor. Yesterday's performance was very, very encouraging. The final tick on the Nifty was at the high point of the day. So it was a resilient performance coming from the Indian markets. And the broader markets as well, pockets did very, very well. In fact, the mid-cap index was up. And now the margin trading book that had gone to 85,000 crores odd, that's come sub 70,000 crores. It's at around 69,000 crores. So a lot of that margin triggers that were getting called out and were getting, pulled out, that seems to be more or less factored in because the margin book has come down. It was actually 85,000 crores plus, and then gradually it's been coming down. So that's good. Some of the poison out of the system. And off late, if you take a look at 2025, you'll say, well, the Indian markets have underperformed. Yes, we have underperformed, but just take a look at what we're doing in this month itself. Gradually, we're performing in line with emerging markets. And in fact, I won't be surprised if we start doing a relative outperformance from here on because valuations are far more palatable and domestic flows expected to remain quite solid. The pain point, that's the FI selling. That's been the problem pocket. Well, in the recent, downtick that we have seen, they've sold close to around 28 billion odd. The previous time that they sold a lot was, in 2021, 2022, when they sold $32.5 billion. So 85% of what they did that time around. And this time around, we've already corrected close to around 15 to around 16%. In yesterday's trade, yes, there was a net sell number coming in from the FIs in the cash market, but there was some buying as well that we saw in stock futures. So there was some part of that was that arbitrage that we have been talking about. Sell in the cash market, and they're buying in stock futures as well, and they're net long in stock futures. Yesterday, the markets ended up. The India VIX as well popped up very, very little. It was up close to around 0.5%, but the India VIX has been very, very well behaved. It's still holding sub that 15-16 mark, which is very, very important, indicating that there is some bullishness that's creeping back in. The options data comes up in the screen, and there was some put writing as well that we have seen yet again, which takes us straight to the levels. On the downside, 22,250, important mark that you're looking at. That's the near-term support that you're looking at. The firmer support comes in at around 21,800, while on the upside, closer to around the 20-day MA, that's the mark you're looking at. On the Nifty Bank as well, we're in that range. On the downside, that 47,700, that's the level that we visited yesterday as well. That needs to hold out, while resistance comes in at around that 49,000 mark, which would mean that we get past the 20-day MA. In terms of stocks that I'm looking at, IndusInd Bank, well, that's been the stock in focus. From the group company itself, yesterday, Ashok Leyland did see some selling pressure. And because the group now, in fact, is in a bit of a, is in the spotlight for the wrong reasons, because that trust issue has hurt in IndusInd Bank, I'll keep an eye out on Ashok Leyland. Was it a knee-jerk reaction that we saw yesterday, or is there more pain in store? So that's the stock I'll be tracking.
Okay, absolutely. And take that point, we need to watch out for Ashok Leyland as well. And Rima, take your point as well. And that's important to keep that in mind, that the selling included IndusInd.
Included IndusInd,
X of that, maybe we should still be on a good wicket.
Well, let's see. As you said, right, perhaps most of the poison is out of, IndusInd Bank in terms of selling. So today's FI numbers will be important.